Hi there, everyone. Dave Barlow back with the gang of four. And as we wrap up 2022, it's been a good, strong year. It's kind of been a weird year. And this is kind of our market wrap up for the year. The first 3-4 months kind of came in like 2021, super hot. Everything we threw on the market was selling in record time for $30,000, $40,000, $50,000 over the asking price. Interest rates were around 3%. And then as we got into April, we saw a nudge in interest rates, May, June, July, and then we saw things kind of peak at 7% in August. And that kind of put a stranglehold on the overall market. And it's been just kind of a weird year. I go back to 2005. The market was on fire, and then things kind of slowed down, and we ended up with the foreclosure crisis that started in 2008. I don't think we're going to have a foreclosure crisis for a lot of different reasons, but primarily because lenders are not lending to every Tom, Dick, and Harry. I mean, back in 2005 and 6, we used to kid, if you could fog a mirror, we could get you a loan. I mean, it was stated income. How much you make? I make $100,000 a year. Okay, here's the house you can buy. Homeowners in today's world are being vetted a lot tighter. We do see some lenders at 580 credit scores again, but most of them are at 620 or better. People have more equity in their homes than they did back in 2008. The average sales price in 2008 was around $180,000. Today, the average sales price is around $340,000. And so there's much more equity in homes, and I don't think people will just let their houses go to foreclosure. We used to do a ton of short sales because people owed more than what their house was worth. And so that was a big industry back in 2009, 10, 11. I don't see that part coming here. And so anyways, I think things will kind of settle in a little bit as we get into 2023. But I'm curious as to you guys' quick thoughts, and we'll just go around the table here. SB, what are your quick thoughts?
Well, I think interest rates, Dave, are going to play a huge factor as we start to get into 2023. I think people were very comfortable the last couple of years when they were getting rates at 2.5% to 3.5%. And of course, we've seen a steady increase in interest rates. And as we sit here today, rates are just over 6%. The good news is you talked about it earlier, is our inventory levels are up, and the economists are projecting that interest rates are going to fall back into the 5s as we get into 2023. And so I think with more inventory, less competition, and a little lower interest rate, I think it's going to become a very, very nice time to purchase your new home here in Columbus, Ohio.
Mike, what do you think?
I mean, I would have to agree with Steve. Based on all the market indicators, I know that the Columbus Realtors sent out their, Ohio housing report for November, and based on what Sue Workman is calling, that we're probably going to have a good forecasted 2023. We were actually ranked by Realtor.com as the 14th top 100 housing forecast for 2023, and I think it has a lot to do with it's still very affordable to purchase a home in Columbus, whether that's one of the suburbs, one of the outer suburbs. Inventory's on its way up. Interest rates should steady out. I think it's going to be great. You have the new Intel plant being built. Columbus is a wonderful city. It's growing at a rapid pace. There's going to be opportunities to purchase your home here and get in at a lower price point, because I don't foresee it slowing down, to be completely honest, with what's happening here in the city.
Yeah, we're seeing right now about 40 to 50,000 new people moving into the Columbus metro area every year. And so I think that will continue. And that projection was prior to the Intel plant being announced a year ago or so. And everything out there in that New Albany headed towards Granville and Galena and all that out towards Newark is all growing very, very rapidly right now. They're trying to get the infrastructure into place. And so I see that, 40, 50,000, growth rate continuing into 2023. And those people, they're coming from, Chicago, Detroit, Cleveland, wherever. They've got to have some place to live. And I know that they're building apartment complexes on just about every patch of land that you could possibly, squeeze a 3-story apartment complex into. But a lot of those people want to be able to purchase a home and build equity for themselves and not for the landlord. So, Jay Marinsky, what do you think?
Yeah, I mean, I think we had a weird year with interest rates shooting up to where they were, prices as high as they were. I think it was a feeling out sort of year. And I think as we get into 2023 and another year has passed, it's a new year. I think interest rates are digestible. I think the prices I'm seeing a ton of price cuts right now on houses that are just sitting. Right. I think sellers are going to come back to reality a little bit that, the feeding frenzy that was, post-COVID is over. And, people are going to be a little more reasonable. And I think it's going to be more of a negotiation, but good deals are out there. And so I think it'll be a little bit more of a healthy market and not be as much of a seller's market as it has been and kind of balance out.
One of the things that I read here this week was, and I believe it was for the month of November, was the first month in like 3 years that the average appreciation wasn't double digits. It had fallen back to like 9.8% was the appreciation value. And so I think what you're talking about there, Jamie, that we're going to see prices kind of stabilize a little bit. I think they're going to continue to increase. I don't think they're going to decrease like what we saw from the foreclosure crisis. Again, average sales price in 2008 at the beginning of it was around $187,000. And then at the bottom in 2012, the average sales price here in Columbus was about $147,000. So we lost about $40,000 of equity. But then last month, the average sales price here in the Columbus area, $340,000 plus. And so in 10 years, in 10 years, we grew $200,000, went from 147 to 340 plus.
150%.
Yeah. It's as, who was Kramer's attorney on Seinfeld? Jackie? That's outrageous.
Yeah, 150% in 10 years.
Well, it would go in line. Their report from November says that the average sales price was up 7.9%, which is probably the first time I've seen it, even since I got into the business, that's lower than like a 10% increase. So it's pretty wild. Yeah.
Yeah. And so, we'll see things kind of stabilize. We'll see interest rates kind of pull back a little bit. Hopefully they get back into the mid 5s or down into the low 5s. Those buyers coming into the market, they're going to have to buy something in order to build. Even if you're paying, let's look at it this way. Even if you're paying 6% and you're getting 7.5% appreciation value, and you get the tax benefit that you can claim the taxes and your interest on your income taxes, it's still a heck of a deal.
Plus the pride of ownership.
Yeah. There's a lot of things to go with it. So anyways,
it's huge.
That's kind of what I see going on right now. And as we head into 2023, I hope that you guys have a very Merry Christmas. And everybody out there watching, Merry Christmas, Happy New Year's, and go Bucks.
Go Bucks. Amen.
We're praying. Go Bucks.
Yeah, no kidding.
All right, guys, I'll see you next week.
See ya.
See ya.